Hello and welcome to another update video about GALA. On the GALA chart, we are looking at the bigger picture here now, and you can see still that we can see this 5-wave move to the downside, which bottomed in October. That is not a bullish sign. That definitely means that at least we need to be on the side of caution here on this chart. Nevertheless, down here we had a potential 5-wave move complete, and we're expecting a corrective rally, at least a corrective rally to start. We have defined several layers of Fibonacci retracements or resistances that haven't even been reached. So there's a range defined between 6.2 cents and 33.6 cents that, well, at least should be reached ideally, to complete this wave 2. I'm counting the move down as a wave 1, the move up in a wave 2. And that can still stretch out further. Would be ideal for a wave 2 to at least reach the 38.2 retracement level. That's at 6.2 cents. Can easily stretch higher, but we will always need to track the relevant support levels along the way, as well as the structural resistance levels to understand, what are the next levels that need to break to move to basically the next one and the next one. We have to take it level by level with GALA because the overall chart doesn't really give us clear reason to, put a very bullish scenario onto the chart. It's just not there. Doesn't mean it couldn't come up, absolutely. And also I have to mention that to me it doesn't matter if I'm labeling this as an ABC or a 1, 2, 3, which would then result in a 4 and another 5, which would be more bullish. But first of all, we need to fill in these first 3 waves as an ABC structure, so there is much more work to do. And then, to be honest, without breaking above 33.6 cents, I cannot confirm that new all-time highs are on the radar here or on the agenda, because first of all, the price needs to get there, and that's already a huge undertaking to get to that 33.6 cent level anyway, because really only above that level we can rule out, well, no, we can't rule out, but we can reduce the likelihood for the yellow count, which would, take us down. By the way, I have to change this one to yellow as well. Because any wave 2 normally does not move beyond, or at least doesn't sustain beyond the 78.6 retracement. So that's just to address here a potential concern that some had that, I only take into account the bearish perspective. Well, look, I mean, first of all, even in this scenario, I allow it to basically make a 9 to 10x, no problem, okay? But first of all, we need to see that level break. I'm open to more bullish scenarios, but I take the approach that risk management is more important, and that we, should just consider the context of the chart, which is a long downtrend. Yeah, and to be honest, there's no point in, I can label this 1, 2, 3, 4, 5 as well. The resistance levels are the same, and it doesn't matter. It's just labeling. Okay, so the trend is still up short term. Okay, what we see on this chart, and that's just something else to highlight. Obviously, I talked about it many times that this 6.2 cent level is quite relevant because it is the 38.2, the first main Fib level. The first main Fibonacci retracement level, 38.2 retracement at 6.2 cents. Also, it's structural resistance because we touched that level basically here in January and also got rejected here in August last year. And that, sort of looking at the bigger picture, could form a large inverse head and shoulders pattern. So I'm not usually a huge fan of these patterns. They are fairly unreliable, but when they align with Elliott wave patterns, they are noteworthy. And well, this scenario, so this is obviously a bullish reversal pattern. Now again, that would not be, that would be pretty much in line actually with the wave count, because the assumption would be we're moving up in an A wave that can still stretch higher, then a B wave pullback, and then that C wave rally. Okay, so that's sort of the assumption. Just want to highlight, okay, look, we also have a structural resistance level here, and it could form a very nice inverse head and shoulders pattern. Now, I only see the potential right now. Not saying that this is what needs to happen, but I pointed out when I see the potential. So that means at the moment the likelihood is that the price is still moving in this A wave, possibly could stretch out higher to reach that level, then a B wave and the C wave. Let's see if we actually get there. First of all, I have to say again that in the short term, the wave structure itself is very messy, it's very unclear, not reliable at all. The wave 2 here is very, yeah, it's not very well defined. Then what is this? You know, is this an A, B? Very difficult. So at the moment, my main interpretation of this chart is that we completed an A wave. This was a very shallow B wave, unfortunately not reliable because too shallow, but was never invalidated. And then we can climb higher in a C wave, possibly an ending diagonal towards that level that I just showed you. And at the moment we're still holding the ascending trend line, even though it's getting challenged. We also had here before this kind of breakout point, breakout level, yeah. So this is currently being tested, this white line, currently being confirmed from above potentially. But what needs to happen really here to make some progress in the chart and follow the yellow scenario here, which could send the price higher. And don't put too much emphasis on the microstructures here. They are not really to be seen as predictive. They are my best idea, you know, with this scenario at the moment. I also don't even have a very clear support level. I mean, because it could be that at any point this B wave starts, I really have to use the 78.6 retracement level as support. That's the only support level really that I can offer, generally for trend continuation. I mean, you can use the swing lows before, okay, but really to increase likelihood that we're heading to new bear market lows, it takes a break below 1.57 cents. Until then, I think I'd be looking for those sort of higher prices here, at least to get to that resistance box. And then the price, first of all, to make some progress, needs to break above 3.52 cents. That's a resistance level, and then get to 5 cents next, get beyond that, and then we arrive at that 6.2 cent level. So yeah, what exactly this is still a bit uncertain, but the wave C to the upside could start next, wave C of 3, then another 4 and 5, and that would work out quite well in terms of, you know, the distance to get to that red resistance zone. So we have to take it level by level with GALA. It can just chop around a little bit longer. The breakout point, I think, is clear to the upside. Relevant support is clear. Larger context should be clear as well. That's all I can do at the moment with this, to be honest, quite messy chart in the short term. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.